Hi, everybody. My name is Pretty Padmanabhan. I'm the founder of 10X Growth Strategies podcast. And it's my pleasure to host this panel, Building AI Rocket Ships from Idea to Exit. So we have two fantastic speakers, and I'll have them introduce themselves. Omer?
Hello, everyone. I saw a lot of QR codes before. So here's mine, by the way. If you, I'm just kidding. I just came back from a conference, and one of the things we're doing is, again, people are scanning our QR to get some freebies. My name is Omer Gottlieb. I'm the CEO, co-founder of Sale Speak. Yeah, is it now better? Okay, good. My name is Omer Gottlieb. I'm the CEO and co-founder of Sale Speak. I previously co-founded a company called Totango, which was a customer success platform. Run it for about 12 years, raised about $100 million, eventually sold it in 2021 to a private equity, then retired a bit, and then got bored, and about 2 years ago, started Sale Speak.
All right.
My name's Guy. I was in a CEO group with another guy named Guy, who was Omel's co-founder. And I was an aerospace engineer who spent half of college coding AI to design airplanes and then went to CMO, right? The straight line, as one does between those two. I spent 10 years in product, then 10 years in marketing. And 10 years ago, was co-founder and CEO of an AI website personalization company called Intellimize. We raised $52 million and were acquired by Webflow a year and a half ago, where I still am.
Two fantastic stories. Let's talk about the beginnings, right? The origination story. Like, what inspired you to start your company, and and what were some of the factors around you that made it happen for you?
Sure.
I'm going to speak about Sale Speak. Totango was so far away, I don't remember. No, I do, but first of all, a bit about Sale Speak. What we're trying to do is really create or fix the B2B buying journey by enabling an intelligent conversation layer. So many founders here imagine every digital touch point between a buyer and your company is actually going to go through an AI that is as smart as you and provide insights back. So for me, it's all about really identifying that there's a problem with the way the B2B buying and selling journey is happening and how to fix that. And we spoke about the original thing. I've been running the go-to-market in Totango for a lot of years. And if you think about it, there's a lot of frustration points there. And in Totango, we sold deals from $5,000 a year to $5 million a year. So we've seen it all. And it was always difficult, always frustrating. And I remember even me being on phone calls together with my own sales team and saying, oh, but why did they say that? And why did it? It was so frustrating. Now, I wore many hats. I was the first seller, and then the manager, of course, a business owner, and I'm a buyer all the time. Even you founders are buyers all the time, and I hate being sold to. So I knew there was a problem. I knew there was frustration, but technology wasn't there to actually fix it. I didn't even think we need to fix it. And then during my retirement, ChatGPT came out. And for me, literally one of the first questions I've asked ChatGPT is, tell me why Totango is better than Gainsight, who was our first competitor. And it was actually a good answer, not one that I liked, by the way. I mean, I think Gainsight would have liked it better, but it started an idea in my head that, hey, if that thing can be at least as smart as my own salespeople, maybe we can actually figure something out. And that's how we started the journey.
Fantastic. So anybody who is looking for solutions for GTM, you know where to go, and you know where to scan the QR code too. So Guy, tell us about your origination story and how did you come up with your idea and go forward?
Like Omer and Sale Speak, I was the customer. I was running marketing at a programmatic advertising company called Brightroll. We sold programmatic video ads. We had an low eight-figure budget that we optimized beautifully. I mean, shame on us if we didn't. We were an advertising company. We drove all that traffic to our website, where I and my head of demand gen were accountable for turning it into pipe for sales and treated everyone the same. We personalized every interaction before then and then forgot all of it. And I looked at the tools that were out there. I got to know Dan and Pete, who founded Optimizely. and was like, there is a better solution here. And like so many innovations, it was taking a pattern from one place, how programmatic ads are logically done, not the underlying ML, and putting it in another place, personalizing experiences on websites. I'd known my co-founders for 20 years. They ran the personalization on Yahoo's homepage for more than half a decade. So that was identifying the problem. We then went and spoke to more than 100 marketers saying, is there a there before we left our secure, high-paying jobs? Brightroll had then been acquired into Yahoo. And so we were all in the same employer again. But the real reason we started was not that. It wasn't to be a founder. It wasn't to not have a boss. It wasn't any of those things. It was because for the three of us, we could imagine no more fun way to spend the next several years of our lives than with each other, without a whole lot of the normal mumbo jumbo that happens in daily corporate life and is inevitable when you get a very large group of people together. And it was because of that, easily the best job I've ever had. Again, not for being CEO, not for being, with all the ups and downs, I can't wait to do it again.
Wow. It's true, right? We spend majority of our work, of our time with our people that we work with. And so why not do to the people we like and get along with? So typically when startups come to VCs and investments, they look for TAM, traction, product, team. So you talked about customer validation as an important thing that you went and found out. So Omer, I would love to hear about the MVP, the product side, right? How did you decide what was the right MVP that you could release to the customer? And then how did you make that successful?
First of all, the honest answer is, as anybody, we released later than we should have. We should have probably released earlier and earlier. And that's something that, I find myself mentoring other founders. That's one of the, I think, the best advice I can get. Get your product in front of the market as soon as you get. Yeah. I think luckily, or, maybe not luckily, building a company today is completely different. Forget how it was 12 years ago in Totango, 2 years ago when I started Sale Speak. That's even different. The things that we can do today with technology are amazing, which there's good things about it and bad things about it. The good things about it is that we can literally build a lot with less and move quickly. I have 10 people in my company. And, before that in Totango, I focused mainly on how can I hire the next person? And now I'm focusing on how can I not hire the next person? So we were doing a lot of things with 10 people that we weren't able to do with 50 people because of technology. So it means that we can actually move fast and get the product in front of our customers. But it also means that there's 10x more competition, right? It is easier. I would say easier to build a product. I'm not saying it's easier to build a company because, the guys before spoke about building a business. So for me, I think the answer is the decision about releasing the MVP earlier than you think. Like earlier than you think, put it in front of a lot of people and then see the responses.
Yeah. Now I can hear that common thread between you and Guy, even talking about the customer validation. In fact, people might have heard about Steve Blank and the customer development model that was developed in Stanford, and also now it's become very popular in startup world, right? So we talked about the market and the product and gathering customers, initial traction. Let's talk about the team, right? Because that is the most important thing on hiring the right people. So we'll start with you, Omer, this time. How did you go and find the right team members that aligned with what you had to build? And was this something you got naturally, or you actually had to hone it as you went along?
I think first of all, there's a lot of mistakes that we've done in Totango. I can tell whole stories about hire the wrong VP of sales that cost us 9 months. And there's a lot of, so we knew me and my co-founder that hiring is important. But for me, and again, I have the privilege of doing it the second time, so it might not be applicable to everybody, but one of the first things that I decided as reasons of why to start the company, as Guy said, it's literally about having fun. Like literally I'm thinking about how can I have fun? Because it's going to be a long journey. It's going to be a difficult journey. And for me, having fun is an important part of it. one of the major things for me for having fun is who are the people that I'm surrounding myself with. By the way, who's the co-founder? And I deliberately made a decision to be with a co-founder. It's not right for everybody, but that was for me. Who are the investors and who are the people that we're hiring? Luckily, again, my co-founder is the CTO, so technical people, it's very easy for him to say they're a great fit technically. I was more trying to understand whether they're a great fit for what I'm trying to shape in this company. And I think for us as a company, we're going to win and die based on our ability to move quickly and run a lot of experiments. So it's about flexibility. It's about learning. I'm learning new things every day, especially in AI. So that's one of the most important things I'm looking in almost any role. Although, again, it's difficult to find those things in everything. Another deliberate decision we've made was where to hire. So my previous company, Totango, I'm originally from Israel, from Tel Aviv. So we started the company there and then I moved. And I forgot what it means to sleep, because you're running a company in Palo Alto and your engineering team is in Tel Aviv. One of the first decisions we've made in this company is that we don't want to hire in Israel because of the time zone. But we also made a decision not to hire locally, because I don't know about you, but hiring people in Silicon Valley is highly competitive and highly, highly, highly expensive. And we've decided to actually build a remote company. Our engineers are in Brazil, Colombia, Argentina. We do have one in Israel because that was a good find, but working hard on building a remote culture with that.
Wow. Yeah, so I think that is the new norm with all the global, right? Having teams across different continents. And one thought for you, Guy, I think Omer talked about fun that you mentioned earlier and also the team composition. What are some qualities that you look for when you're hiring people, right? Can you deep dive into that? And also in the world of AI, what are some top first 3 hires that somebody has to think about as a founder?
Great questions. The first thing the 3 of us talked about on the morning of the first day was culture, because that was a huge determinant of whether or not this would be fun or not. And so we hired a lot for that. We ended up enumerating it into 6 values. Nothing magical about 6. What was magical is that they stayed the same. We've all worked in places where you're like, oh, if you don't like the values that are on the walls, wait 6 months, they'll change. You'll get something new to put on your prox card. They didn't. And at the same time, that was not a recipe for, oh, let's all be a stereotypical fraternity and all be the same. We were like, we cherish diversity of perspective because it produced better business outcomes. And so we wanted to find people who had different experiences, different perspectives, but shared those values about how we work together. We're good at uncovering differences in perspective. Do we have different experience, different data, different underlying assumptions? It made discussions a lot less. They could be heated logically. They were never heated emotionally. And that, for me, makes me happy. And then some of the fundamentals, right? You want somebody who's super curious, has grit, is humble. There were no egos there. I've heard the no assholes rule, yes, but like beyond that, you just want someone who's, what was good for me or good for my team, those like weren't valid thoughts in the company, right? You want like what's going to go delight the customer. Couldn't agree more with that being said earlier. And long-term greedy, what's going to be good for the shareholders. And so we tried to get good at discerning, how do you figure those things out in the interview process? We had intentionally a relatively quick one. We then had a simulated meeting at the end. It was different for every role, but we wanted to see like, how does somebody react to feedback? More importantly, actually, than that was how did they react in the prep? We would say, oh, I'm your hiring manager. Don't worry about saying something stupid to me now. Worry about saying something stupid in the meeting. Let's talk through things. So revealing. And then the thing I was felt very strongly about was blind references. And by that, I mean finding someone or someones who they did not tell you to go talk to. I expect everyone they told me to go talk to would say amazing things about them, and go learn more about who they are at work. And don't take it as blind gospel, in that we had a VP of sales who was successful for a long time. And his third blind reference said, he's a terrible human being. And I was like, everything I've seen about him and all the other references say this is not right. Let me go dig further. And I did 3 or 4 more and I realized that guy was the problem. It wasn't the human being that I was considering working with. And he ended up being wrong. Yes, it was that human. And so to take that with a grain of salt, all of which takes more time. And you're like, wait a minute, but I'm behind on capacity. I need to hire someone. Yes, and it is so much longer to bring them on, realize they're not the right fit, train them, move them out, find the next person. That bit of extra time we found worth it, and we still made a ton of mistakes.
Yeah, no, absolutely. I'm hearing so many great nuggets, right? That some of the things that you're talking about, I can recommend a couple of books. One is the Growth Mindset book, The Learning Mindset, one of my favorites, and also the $1 Trillion Coach. That is another interesting book. I'm hearing a lot of things that you're talking about from that. Now, this program, as you know, is co-hosted by 10x Growth Strategies. So we would always think about discussing growth and scale. So let's come into that moment, right? We did all the MVP, you did the customer validation, and you hired a great team. Now your product is going great. What are some opportunities and challenges you had when you had to scale?
I'll start. It's a mistake I won't make again. I commit to the board some number. We all agree on it. With the board, it's not tops down. The team and I agree on it. It's a number we are all aligned with. This is aggressive but realistic. So VP of Sales very thoughtfully says, "Hey, let's do the math. That's the number you want to hit. Here's how you need to hire men and women to go get there. Let's assume a fallout rate." It all made sense. I let him hire to that. I will never do that again. They're so expensive. They're among the most expensive people in the company, except the engineers, which we did hire locally, and we could have a good conversation about that. And we didn't have enough pipe to feed them. And that is bad for everybody. I will hire to pipe, even if it disappoints the board and the investors. I want to be upset with sales because they're leaving so many opportunities on the ground. Easy to say now when I'm not feeling the weight, I'm not going to make the quarter. But the burn that caused, it was, in retrospect, I will do that differently second time around.
So I've scaled our go-to-market into Totango. We're starting to scale in Sales Speak. We're still a bit early. If there's one thing I want you to learn from this is don't listen to me and don't listen to anybody. And the reason is that I can tell you so many playbooks that are working and so many playbooks that are not working, but this is right for me, for my company, for my ICP, for my product. In this moment, that's a great observation. And you have to experiment. If you bring on somebody that tells you, I know exactly the playbook, either they're lying or they don't know. Literally, if I would do the same things I've done in Totango in Sales Speak, we would fail. And I'm spending a lot of my time and energy right now really figuring out what are the right go-to-market playbooks. How do we scale that? And remember, the entire environment has changed. There's so much competition out there because, again, it's easier to build a product. A lot of companies are using AI in the wrong way. So they're actually spamming. How many of you got so many spam emails and LinkedIn and messages and LinkedIn? So the way that you would scale your business earlier is probably different today. And again, I'm still figuring out. A lot of companies figure out. Some companies, I can tell you that personally, for me, I'd love to build a company that is much more, I would say, product-led oriented and not heavy sales oriented. But that's my preference. It doesn't mean that's the right thing. It doesn't mean that's the right thing for you. So all I'm saying is, do know or learn what playbooks exist there, but don't take anybody that tells you, I know exactly what the playbook is going to work for you, because you have to experiment, and then we'll see.
Well, now we can even put it on ChatGPT, and that'll give you like 10 different playbooks, right? But I absolutely agree. Like, what is the right thing for that moment? Would you like to add anything?
I could not agree more. And for us, it was a red flag when someone would come in with excellent pedigree and say, I know exactly how to do this. And usually it would come out in the simulated meeting, where what we really wanted was somebody who did know exactly how to do it, but then had the humility to realize just what Omer said. That worked then. We're a different situation. And they come with the curiosity to try to adapt it. That was the winning formula we found.
No, I love that. I think, it's really good to hear that mindset. That's so important. That's what you care about. Founders here in the last session that Deep and Kayvon had, they talked about how they don't like when founders just create like a PowerPoint or maybe like a napkin and then go to the investor directly funding. So the question to you I have is, what made you decide whether to go for funding or to not go for funding? What were some thoughts, like the prior startup versus now? Right? Either one of you can start. Yeah.
Sure. Couple of thoughts. One, I, with humility, recognize or experience that it was harder to find a story with investors than it was with customers. And by that, I mean that we were B2B. Our price point was at that point $35K. We went up to $120K as our ACV over time. But you talk to 20 customers, you started seeing consistency. And investors are paid to have that different point of view. And so we'd get diametrically opposed, 180-degree opposite points of view. And so I do think there are some investors who are like, no, I actually want the PowerPoint stage because I want the de-risk, or I want the risk reward profile that comes with that. And others, like we heard here earlier, who are like, show me some traction. Both are valid. And in fact, I think it goes to like, decide the game that you're playing. Know if you're playing I'm going to grow slowly. Other people are going to pass me, but I'm going to generate cash. We're going to have our destiny in our own hands. Decide if you're going to raise a little bit, which I think we're going to hear a lot more about, the $1 billion founder, solo or 2-person company, or I'm going. And we decided to go, right? You go to 52 million, you are committing, you are closing a bunch of doors on your exit, on whatever the end might be. You are committing to a certain growth path. It's not good or bad. It's just a path. Right? It is a path we glorify a lot in the Valley. It produces a lot of amazing results, but it's like, that's a path. The Bootstrap's a path. So the three of us asked our spouses and our families, hey, what if we earn nothing for a year and this turns into zero? Will we lose our home? Will we have trouble in our marriage? Will we change our... And we were like, no, we've all been fortunate enough to do that for a year. Not for more, but for 1 year. And so after a year, we were like, okay, actually, other people are going to pass us. We do think being early matters. We need to hire other people. We can't afford to pay them and cover ourselves. We need to raise money. That was the deciding factor. We were fortunate to be able to point to tech that worked, customers that were rabidly excited about it, whiffs of product market fit. That was the story we were telling then. And the one last thing, by the way, I'll share is we were talking about co-founders earlier. I was really surprised then, not in retrospect, how much the first round of investors, the seed stage investors, cared that we'd worked together before. Now you see how many startups die because the founders get into a spat and you're like, yes, there really is something there about that trust.
And I just want to echo that. And I love what Guy said about know the game that you're playing. There's no right or wrong. By the way, the fact that you raised a lot of money doesn't mean that you're going to be more successful or more happy. So, and there's no right or wrong for, a generic answer. You need to figure out what is your best route. It also means not just how money you raise, but also who you raise from. There's a big difference raising from a big VC versus a small VC. There's a huge difference in who's the partner. I can share horror stories about, things we've had in Totango and some amazing stories. So I think you have to be very, very, very deliberate in that. Like you decide. By the way, in Sale Speak, I've raised a seed round of $4 million. And I can tell you I have many friends, second time, third time, and they don't have any interest. They want to help me. And some of them told me, Omer, you're crazy. Start with $4 million. It's too much. Start with $2 million. Figure out. And the other half told me, Omer, you're crazy. You can't start a company with $4 million, $8 million. What I'm saying is, and each one of them was right for them. So there's no you should raise this from that. You should chart your route, identify where raising money has a price and has a prize. So figure out what those for you and be very deliberate. Know the game that you play.
I have one more. One thing that, forgive me if it's obvious to you, it was not obvious to me at all before raising more than once. And that was, know the game they're playing. Your partner has basically committed to trying to find a company that will return their entire fund. So when you raise from a large fry who's got $1 billion fund, know that success for them is measured around $1 billion. And if you're not aiming for that, you're got the wrong partner, because that's the game they've committed to. You then raise from somebody who's got a $50 million, $100 million, $200 million fund. Their definition of success is really different. The second VP of sales we had talked about walking into Don Valentine, the godfather of Sequoia, into his office, and he had just come off a $500 million exit. He was so proud and was ready to sit down and impress Don Valentine. And Don Valentine's opening words, at least as he told it, were, "What a failure." Because Don's definition was up here. That was the game Don had committed to playing. It's not a picking on Don or Sequoia. That is the incentives and the games that each of them have chosen to play.
Yeah, that's a very important point, because that the investor founder fit is so critical. Because as I think many of you might have heard, that you spend at least 10 years with an investor on average. The average length of a marriage in the US is 7 years. So better make the right decision over there. So we'll ask one more question, and I'll open it up to the audience. So keep your questions ready. So both of you have had successful exits for your company. And many of the founders here, as they're building, they're thinking about how can they make themselves and the team successful. Tell us about your thought process, and what are some strategies that you did worked for you as you built your company towards the exit?
You're not going to like it. It's, success is a lot about being in the right place at the right time, with the right team, right? I don't think there's no recipe. I wish there was. By the way, I don't think there's, I don't know of any research that shows correlation between being a second timer or third timer to success. I can tell you that what I'm doing right now at Sale Speak is not less difficult than what it was in Totango. It's different. I think I have much more mental capacity, and I'm taking things easier, but it doesn't mean I'll be successful. I think what really makes companies and teams successful is really being in the right market, with the right team, being very curious, as Guy said, the ability to experiment. But one of the most important parameters, which I don't think anybody can control, is being there in the right time. And you need to guess. The company Clay? Ever heard about the company Clay? Clay is very successful right now. You know how long it took them to get to the first $1 million? 6 to 7 years. How long did it take them to get from 1 to 100? 18 months. Okay? So how many people will stay 6, 7 years really struggling, really struggling? So they had to have the right partners, VCs, and the right team and the right mentality. So again, timing is something that I don't think anybody could plan, but luck is part of it.
I couldn't agree more with what Omer said. And I think the very unsatisfying part is you don't control the outcome. You can control the odds. You can do everything in your power to have all those other ingredients, but ultimately you don't control the outcome. For me, probably the biggest growth moment while being CEO of Intellimise, maybe in my whole life, was my coach telling me, hey, you are used to, as I think probably many of us are, having things be hard because you work hard at them and you determine the outcome. You got the good grade, you got the job, you got the promo, whatever it was. And he was like, what if you played the game to win, not to win, but played the game to win because you like winning, but it's to play the game to win. That's the thing. And for me, it sounds small and pedantic word-wise. For me, it was such a shift. And you reflected it in, you talked about how as a second-time founder, the odds actually aren't different, but you hold it differently. And that was the thing. After that, I cared just as much about winning. I worked just as hard, but I held the existential threat that I felt every day. We could have $50 million in the bank. I felt the existential threat every day. I held it differently inside. Full stop. The one other thing I'll share is I think we have the privilege as founders in this room of you actually define whether it's okay or not for your team. What happened. They're looking to you, not just the words you say, the look on your face, the tone of your voice, how you walk in the office, how you react to little things, to know whether it's okay or not. And so you could take an absolute shit sandwich and say, this is okay because of all these other things. Or you could take some great success and be like, that actually doesn't matter. We did that with fundraising. We were like, we should feel incredibly privileged that these incredibly smart people who could put their money anywhere chose to put it with us. But that's not success. Success is a customer getting up on stage and saying great things about us. Most companies wouldn't talk about it that way. That's how I chose to frame it. And so, yeah, you got the privilege of defining whether or not it's okay.
Thank you. Given the interest of time, we'll just take 2 questions. So make it good. Michael.
All right. Guy, I have a comment for you and a question. I have a buddy who does web marketing and does AI SEO. Anyways, he just absolutely loves Webflow. Like, he just loves it. He told me to tell you, you have truly spared every agency the pain of dealing with WordPress, and we are forever grateful. And then the question is, are you ever going to ship a Bing Index Now integration?
That is a wonderful idea. We totally should. I don't know. I don't know if we will. That's a great idea, and it's a good cheat code for ChatGPT.
Okay. Well, like he's pretty good with AI SEO.
Yeah.
So
If he wants to talk shop, I'd enjoy catching up with him about it.
I'll get contact info after.
Thanks.
Thank you.
All right. One more question.
Yeah, so thanks for the great insights. I have a question around, like you're saying that founders need to also understand who they are partnering with and who their VC is. So what are some of the questions that a founder one should ask in order to get insights in terms of whether there's the right VC, do they have the right incentive in terms of taking it to the next stage, and like, do you have any tips in terms of figuring that out rather than like without spoofing the investor?
I say the first thing you want to do is forget them, go and speak with the portfolio companies and ask
The CEOs that were not successful. Find out how the VC behaved, the specific partner behaved when things went bad. Every company has bad stages. I think that's the key thing. You don't need to ask more than that. Just ask him, okay, was that VC supportive? How did they behave when things went a bit shit? About the VC, you do want to understand how much money they're actually managing. Take a look at the companies they're investing, the round size, and then you'll figure out their expectation, right? You cannot raise from Sequoia and try to sell a company for $200 million. That's probably not going to happen. That's a major failure, right? For you, it could be amazing. So again, you need to decide what trajectory you want to go for, figure out the fund size, but I would definitely do due diligence on the specific partner with the portfolio companies.
I'll briefly add, I know we're short on time. I could not agree more. And that first point, the person who led our seed, I asked him directly, I'd worked with him before. I said, hey, how did you treat the ones that didn't work out? And he said, if it's between 0 and 1, we put in $1. If we're going to return between 0 and 1, I don't care. It doesn't mean anything to me. I need to return more than that. You do what's best for you. I was like, can you connect me with the CEO that had that happen? He did, and the CEO was like, that's exactly what they did. And to each their own, right? Everyone has their own way they're playing the game. We took money from later stage person who used to be in private equity. Every penny mattered to him. That's also legitimate, right? It's just and the other one was where he mentioned fund size. Where are they in the investment of the fund life? You want to know, will they participate and follow on our own? Do they have dry powder, they'll call it? And how much do they have? Like if they invested $1 in you, are they keeping 50 cents, $1, $2 for later on rounds? It also tells you some about their strategy because it signals to the other investors in the future rounds, did they invest in you? Because they've got inside info because they're on your board.
Yeah, great inputs. Well, let's give a big round of applause to Omer and Guy for taking time and feel free to connect with them. Are they open to connect on LinkedIn?
Sure.
Yeah, please feel free to do that. Yeah.